We are wrapping up this last week of September, and this weekend it is October and day one. That is when student loan repayments will begin after a 3+ year pause. Now, even if there's a shutdown, your payment is still due. How much will your payment be? Well, maybe a little lower than what you think. The SAVE plan changes your monthly bill depending on your income and your family status. For example, a single person family making $60,000 a year will pay $227 a month. But get this, if you're a parent now and you're a family of 3 and you make, let's say, $50,000, your payment is $0.
If you're a single borrower and you make less than $15 an hour, you don't have to pay. That's huge.
The SAVE plan is really easy to find. It's the top border on the studentaid.gov website. You cannot miss it. You will be putting in your info to figure out how much your payment can be lowered. Now, here's another positive of the SAVE plan. It treats interest very differently. For example, if a borrower qualifies for a low monthly payment of, let's say, $30, but their interest comes out to be $50, well, they're not going to be charged that additional $20 difference. Again, the payments resume October the 1st, and while that date isn't changing, the rules of how student loans work for this first year of repayment, well, those are changing.
One thing the Biden administration did announce was that there was something called an on-ramp, which was a recognition that a lot of people who are starting repayments might mess up a little bit.
Yeah.
Let's say you miss a payment. Well, they're not going to report it to a credit agency. They're not going to put your loan into default. They're not even going to really consider you a bad payer.
Having some squish room, always good, but remember, the loan is still there. If you don't know when your payment is due, if you forgot who your lender is, there is one source to go to, and it is studentaid.gov.